The federal government has been telling Americans that they can earn $7,500 if they buy a new electric vehicle. The deal comes from the recently enacted Inflation Reduction Act, where the legislation generated a tax credit for any American who wants to buy a new electric car. It's important to know the facts on EV tax credits and that many vehicles will not be eligible. How do you know if you're making the right move? Here is the latest news on electric vehicle tax credits. The Inflation Reduction Act declares that the eligible EVs must be assembled in North America. Restrictions on sticker price, buyer income, and battery components and critical mineral sourcing take effect January 1st of 2023. That disqualifies automakers such as Hyundai that do not make EVs in the US as of today. There is, however, proposed legislation that they are planning to push this back to a later date, but it doesn't sound like this is going to happen quick enough before 2023 begins, so we have to go by the rules that were passed in the Inflation Reduction Act. Consumers need to meet the requirement to earn the tax credit, and the restrictions are significant, with the new credit making it much harder to gain the full amount. It is a non-refundable credit, which means EV buyers must hold a federal tax liability to gain any cash on the deal. Here, let me give you an example. A taxpayer looking to claim the credit of $7,500 has filed their tax return and owes $4,000 on that tax bill. The full tax credit won't be available. Under the EV tax deal, that taxpayer could only earn $4,000 because that's what they owe Uncle Sam, means that they now owe zero. The remaining $3,500 could not be claimed based on tax credit legislation for future years. So you got to use it in the year you buy the car. So if you owe more than $7,500 on your federal taxes, only federal, not state, you're in luck. You get to use the whole tax credit. For example, you owe $9,000 in taxes and you purchase an electric vehicle that is eligible for this $7,500 tax credit on that same year, you'll have to pay only $1,500 in taxes for that year instead of the full $9,000. That's not a bad deal. Well, that's not all. A new EV owner is not eligible for the tax credit on a leased qualified vehicle. In this scenario, the manufacturer owns the vehicle and not you, thus eliminating the tax credit to you. And yes, this is frustrating as it is also misleading to the buyer who wants to lease. Some people do. There is also a price limit on eligible vehicles and an income cap determining who can claim that tax credit. For single and separate tax filers, the income ceiling is capped at $150,000. For joint filers or surviving spouses, it's limited to $300,000. And for household heads, that ceiling is limited at $225,000. Add these additional EV tax restrictions to the list, and the price limits and many cars and buyers are completely eliminated. Price caps are also a factor to qualify for the tax credit. New cars are capped at $55,000 and $80,000 for SUVs and trucks. Vans are not eligible. Now, maybe you'd consider a used electric vehicle. Well, there are limits there as well. In the case of a used vehicle that qualifies for the tax credit, the cost of the vehicle must be less than $25,000 and it should be at least 2 years old. The biggest factor for 2022 is the electric vehicle must be made in the US and must be assembled in North America to be qualified. The rules change for 2023, where the battery and its materials must come from North America, and this limits you and your options as well. There are a handful that will be eligible for the discount. The $7,500 tax credit was actually easier to earn before the Inflation Reduction Act, as the new rules have reduced the number of electric vehicles that are eligible for the tax credit. The path to an EV tax credit does exist as long as drivers abide by the Inflation Reduction Act rule. I suggest you get the paperwork for the claim from the purchase of the new or used electric vehicle, then submit that paperwork with your tax return at the end of the year. Now, check with your accountant beforehand to make sure you're eligible for all those different factors, and then you can check with the dealer to see if the vehicle is eligible that you chose, that it's built in the USA, and the battery materials come from here as well. Your best bet is to buy before the end of the year. The rules get stricter in 2023. If you want to see more videos like this, check out my website, carcoachreports.com, for more car smarts. I'm Lauren Fix for Local Now.